everyone. It's Wednesday, March 8th. Today on the Final Bar, we'll talk with Erin Swenlin of DecisionPoint.com. We'll see what her toolkit is telling us about a pretty tumultuous week, sort of a quiet day today among pretty noisy days. Distribution, really the story of the week so far. Ladies and gentlemen, this is the Final Bar. Hey everyone, welcome to today's edition of the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the best practices of technical analysis. The technical toolkit, which we use every day here at StockCharts.com, is focused on the message the markets provide back to us, right? By analyzing price analysis or analyzing price dynamics, we can better understand investor behavior as reflected in the prices and how they fluctuate, right? Supply versus demand, fear versus greed, optimism versus pessimism, arguably are all reflected in the price action of different stocks and ETFs. Let's do our best to try to make sense of these markets here today. Using that technical toolkit, let's get right into our market recap. As I mentioned in the introduction, sort of a choppy day among pretty noisy days, right? The overall trend to this week has been sort of that inverted V that led into yesterday's distribution day around the Powell press conference. Today's sort of chopping around. You think of today as sort of a digestion day. We haven't had one of these in a little while, but the digestion day is you have the big move. That's your big meal. And then you have a digestion day. Sort of things are in a bit of an equilibrium, sort of a pause, lick your wounds type of day. And as we set the stage for the next move. But don't get me wrong, there are a lot of charts, particularly some of the major averages at really key points. Key lines in the sand, as I like to call them, where, we stay above a certain level, things are okay. We break below that level, and all of a sudden things seem a little less okay. So we'll try to hit on some of those with the major averages for sure. The S&P, by the way, down below 4,000, narrowly staying below it. I attempted a number of times to push above, but failed to do so today. We closed below 4,000 yesterday. We remain below there today with the S&P down to 3990. That's down up just 0.1% from yesterday's close. The NASDAQ composite up 0.4%. And the S&P 100 mega cap index flat for the day, along with mid caps, some other benchmarks as well, like the NYSE composite. The VIX, the volatility index, actually moving a little bit lower, remaining below 20. And that might be an important thing to look at. As volatile as the markets have seemed, certainly recently, this one of the most commonly used measures of volatility, the VIX, which is based on options of the S&P 500, remaining below 20. What I would characterize as low volatility relative to historical averages, but certainly something to pay attention to. Let's look at some other asset classes here because, moves in the dollar, moves in the bond markets have certainly been some of the key things to pay attention to if you want to understand what's happening with equities, particularly with leadership themes. Today, a bit of a weird day in that the curve did not all move up or move down. We sort of had some nuances. So the long end of the curve actually came down a little bit. The middle of the curve, what I would call the 10-year, the 10-year, basically flat from yesterday. Short-term yields actually pushing higher a little bit. That's the short end of the curve there. The TLT, not too much of a difference from yesterday. That's a long bond, treasury bond ETF. And the dollar index pretty flat as well. So when I tell you it was sort of a digestion day, bonds kind of flat, dollar kind of flat, major equity benchmarks kind of flat. That's why we say that. Now, again, having said that, if you glance down on my page a little bit to the market movers, there were plenty of stocks on the move today. And I can't help but notice that most of the top 10 movers to the upside in the S&P 500 are all in one group in one sector, and that's the semiconductor group, right? So AMD, on KLAC, M-Chip, NVIDIA, those are all semiconductor names. On the downside, a little bit more of a mix. You've got some energy, some healthcare, you have some communication services, consumer discretionary, a little consumer staples, a little bit of everything represented on the down day list. Looking at commodities, mostly in the red today, crude oil prices coming off a little bit and energy really just not finding its footing yet in terms of the sector. The energy sector was the worst performing sector out of the 11 today. And that's not a new theme. That's something we've been, certainly reflecting on here recently. That leadership that you saw in energy the first half of 2022, certainly not being the case here recently, as crude oil prices remain fairly low relative to their range here over the last couple months. Gold and silver prices flat to down as well. Copper, the only commodity ETF in our top 8 that finished in the green. Cryptocurrency is a little mixed as well. The majors that we tend to track, Bitcoin and Ether, both down, but not by much. Bitcoin down to around 22,100 as we're going live with the show here after 4 p.m. East Coast time. Let's go to the daily chart of the S&P 500. Just look at what's happened today and this week versus the long-term trends. I'm going to talk with my guest today, Erin Swenlin, about the S&P in a little more detail and some of the great tools that they apply at DecisionPoint in terms of breadth and momentum to really sort of characterize what we're seeing with the markets. But in terms of just the absolute levels, and again, I apologize again for all the lines that I've drawn. I think there's a complexity indicator I'm going to create, and it's just going to be the number of trend lines that I draw on my chart. And the higher that number, the more unclear or the more confusing I think the market action actually is. This is one of those heavier periods where we're kind of in this cluster of trend lines, because these are all the things I'm drawing to try to just make sense of where we're at relative to where we've been. And if you draw a trend line using the intraday low from October and the intraday low from January, that lines up with where we were in sort of late February. We've now broken down through that level and bounced up and now rotating back toward the below that trend line. The trend line using the closing prices, which is here in blue, is a little clearer, and that's actually right about where we're at. One of the cool things we can do is just change it to a close-only chart, which I'll do here. You can see the trend line here. It makes a little more sense. That's that blue dashed line. So we take the close in October, the close in December, and then the close here in late February, early March. You can see we're sort of still above that line. When I think about the markets, not that trend lines are the end all and be all of trend analysis, but for me, they're a great visual way of representing the direction of the market and identifying at least one level, one trigger that should cause you to revisit the thesis that you're on. So we've been talking up sort of the bullish trend in the market. Certainly the break above 4,100 was part of that. Now we're actually back into the consolidation area here in blue between 4,000 and 4,100. We're now back below it, but we haven't quite broken that moving average. Or that trend line. So that trend line is support just below current levels. The 200-day moving average is around 39.40. We'll see if those levels hold. And that's why I say we're sort of one big headline away from a lot of those levels breaking. And all of a sudden the market goes from being okay to a lot less okay, is I guess how I would say it. Just a couple other charts here to finish off. Looking at the Qs, in some ways similarities certainly to the S&P with the rally off the lows, but Q's a little different in that in December we actually retested the October low. In the S&P was a lot higher. Here we actually have sort of a triple bottom type of pattern. We bounced up above the 200-day. We now bounced off of the 200-day from above, and we're holding it. So as long as the Qs, as long as the Nasdaq 100 holds that 200-day moving average again, how bad are things? Not horrible, but they're not great, right? If we're sort of testing support. But again, those are levels, I think, key levels to watch. So I would either be watching that level. I would use our price alerts on StockCharts to get an alert when something like that might be triggered. Just to finish off here, let's focus on areas of strength. When I'm thinking of the market activity today, I'm seeing a big move to the upside in certain areas of the market, particularly the semiconductor space, right? If you look at the SMH or the SOXX, the two most liquid semiconductor ETFs, you can see a nice move to the upside, nice rotation certainly over the last 6 months. But particularly in the month of January and February, we have this continued pattern of higher highs and higher lows. So as long as that pattern is continuing, I'm hesitant to label the market as anything but constructive, right? Over the longer term, right? You can have some short-term pullbacks, some corrective moves, if you will. But as long as we keep making a new high when we rally, and as long as we keep making a higher low when we pull back, things aren't getting that bad. So at this point, the semiconductor space, relative to some others that are certainly a lot less attractive, look at some communication services groups or consumer staples, healthcare. Those are all sectors where you see very few charts that look this constructive. Compare that to what you're seeing here, and you can see why semiconductors not only looking pretty good as an absolute setup, but certainly on a relative basis, you're seeing the nice move to the upside. Where am I less excited about the movements that I'm seeing while scanning for stocks making new swing highs and lows earlier today? for my market misbehavior premium members. And we saw this chart, the Ross Stores chart, among others, TJX and others, where you went from a period just like semiconductors, right? Higher highs, higher lows, breaking to a new swing high, establishing a higher low, and then rallying further. That's changed now, right? We went from being above an ascending 50-day moving average to being below a descending 50-day moving average. The momentum went from being fairly constructive to actually weak or well below 50 and actually testing the oversold region. Look at this beautiful bearish momentum divergence you get on Ross Stores there going into the first week of January. So a lot of those signs of upside exhaustion going into the beginning of the year really following through with a lot of those areas of consumer discretionary starting to rotate a little bit to the downside as well. Just maybe another chart or two. Autoliv ALV, if I remember right. We just recorded our latest episode of The Pitch, which we broadcast earlier today on StockCharts, Stephen. I think this was one of the 15. If not, it was one I was looking at really close to when we were doing The Pitch. I think it was. But ALV is one of those areas of the market showing a decent strength. Reminds me of the chart of the semiconductors, right? And auto parts at times have been a pretty interesting space. But what's compelling about this chart? And that's what I would ask you as we head into the break. Think about a chart like this that is clearly working. What are the characteristics of this chart that seems so attractive? For me, it's the price breaking to new swing highs, making a higher low around 88, which is just where the resistance was in November. That's encouraging. The momentum sitting there pretty strong. A bit of a bearish divergence, which might be something to watch, but overall, we're still going up, and I think that's encouraging. The relative strength improving, right? So I've just hit on a number of things, really sort of fortifying that bullish thesis, watching the price go higher, but it's not just about the price going up. It's what are the characteristics of the chart that help you understand that rotation from downward phase to upward phase. Think about that on a chart that's starting to work, and maybe that will help you identify the next ALV really starting to break out and follow through to the upside. Let's take a quick commercial break. We'll be back with today's guest, Erin Swenlin. We'll see you in a minute. Hey, everyone. Welcome back to The Final Bar. This is Dave Keller here at StockCharts.com. It is such a pleasure to do this show for you every weekday after the close, and we appreciate you joining us. We did a great test of our new studio, recording The Pitch in there yesterday, and we are excited, hopefully, to move in there very, very soon. Later in the month of March, we should be coming to you live from our new studio here in Redmond, Washington. A couple quick announcements before we bring on today's guest, Erin Swenlin. First off, we welcome your questions. We're going to do a mailbag segment tomorrow, on Friday. I will actually not be the person doing the mailbag, but I'll tell you about that here in a minute. But we will welcome your questions. I'll be back on Monday taking your questions as well. You can get your questions to us via email, thefinalbar@stockcharts.com. We're on Twitter @FinalBarSCTV, and we're on YouTube. Put a comment below the video you're watching on our YouTube channel, and we'll hope to answer your question live on the air. End of the week. Also, just to let you know about the upcoming schedule, as I mentioned a little earlier today, we broadcast our latest episode of The Pitch. Erin Swenlin, today's guest, was joined by Miss Schneider of Market Gauge, Mary Ellen McGonigal of Simpler Trading. We had a lot of fun talking about different ideas, talking about the challenges of picking stocks in this environment. But I tell you what, our three panelists had no problems finding charts that actually looked particularly constructive. So it was a really interesting episode to watch, particularly given some of the uncertainties we see in the market. Go to stockcharts.com/thepitch for more info on that latest episode. Tomorrow, we have Larry Tentarelli, editor of the Blue Chip Daily Report. And then this Friday, I will be off going down to California to be on a board meeting at the Walden School, which is a great music school that I serve on. And my guest today, Erin Swenlin, will actually be the guest host, which will be a lot of fun. She'll be taking some of your questions and sharing some of the charts that are making sense for her. Help you wrap up this week. Having said that, let's get on to our guest. And I want to welcome Erin Swenlin to the show. Erin is with DecisionPoint.com, based in Los Angeles. Her father, Carl Swenlin, certainly one of the pioneers of a lot of the techniques we take for granted, breadth analysis, momentum analysis. Erin continuing on his efforts and doing a fantastic job. Erin, great to see you. Welcome back to the show.
Well, thank you so much. It's a busy week here with StockCharts TV for me.
You are all over StockCharts TV, which I don't think is a bad thing. And I appreciate all of your time for us, particularly with this show and guest hosting on Friday. It should be great for our viewers to get a little bit more of your perspective. Your first chart was a really interesting one. We were talking before we went live about all the different components and what this is really telling you about the conditions right now. Talk us through what you're seeing and what's changed this week.
All right. So I started off the week very bullish. In fact, if you watch The Pitch, I come across as very bullish. That all changed last night. I thought, oh, this is perfect. We're getting ready to broadcast how bullish I am. And yet I'm not anymore. it's one thing when your indicators start to deteriorate a little bit, but it's an entirely different thing when every single one of them turn down. So I can't ignore that. I have to be in the bearish camp right now. For the short term in particular, I still think that we have some possibilities in the intermediate term, but now I'm starting to get a little bit not so certain. I did bring my climax chart, and it doesn't update until the end of the day. So this is from yesterday. And what I do is we look at the net AD and AD volume for the S&P, and then we take a look at volume ratios for the NYSE and the S&P. When those ratios get out of whack, as I say, when they spike over 3, we know we have what we call a climax event. And that means it's the exhaustion of whatever phase you're in or the beginning of a new phase. So we got that huge, that was every single one of those indicators, with the exception of total volume, which was a little bit below the 1-year average. But, every one of them just spiked like crazy. We don't even see these kind of readings that often. So it was a pretty clear downside initiation climax. So what that tells us is to look for some downside over the next day or two. It's very, very short term. It does tend to turn into, a lot of times you will see, like with the VIX, it will turn into a reversal play. You'll get some action after it. But typically when I see the VIX puncturing, up or down on those Bollinger Bands, that's a climactic event. And typically you're going to, as I said, get a day or two, notice for what's going to happen.
So interesting. So this was, let's say this was Wednesday, Monday, Friday, I think, when we had the rally Thursday into Friday. This is when you have this sort of everything in the green. And then just a couple days later, all of a sudden we rotate back lower. So that's suggesting here, at least for the short term, probably, I guess, through the next couple days, weaker rather than stronger. Is that fair?
That's exactly what I'm looking at. I hate to go completely bearish here, because things were looking awfully good. The Swenlin trading oscillators in particular were really starting to fire.
You mentioned that. Let's get your second chart. This is a series of indicators we have on StockCharts, and I'm blown away, as always, by how much the DecisionPoint methodology. There's so many different pockets of expertise we can draw on. Talk us through these Swenlin trading oscillators, what they tell us, and what they're telling us going forward here.
All right. So what we look for primarily, so you'll notice these vertical lines. A lot of people ask me, what are those vertical lines? The red ones are at what we call cardinal tops, and the green ones are at cardinal bottoms. And the reason we do that is so we can watch what the indicators are doing and easily pick out those negative and positive divergences. So you can see back in January how we set up on the Swenlin trading oscillators with quite a bit of a negative divergence. We were starting to get bearish at that point. Swenlin trading oscillators were starting to cool and move lower. In fact, it got into negative territory. So things weren't looking so good, and we did end up with that decline. But right when we had those 2 days of decline last week on Wednesday and Thursday, the Swenlin trading oscillators turned up. So I was, what's going on here? Because generally they don't move up on down days, and they did that twice in a row. So I had to let everybody know on Twitter, at least. Of course, my subscribers got to get details, but I did let people on Twitter know, _DecisionPoint, if you want to follow me, and that we were looking at a nice situation for a rally. And sure enough, we got 3 days of it. But the unfortunate thing is that yesterday they started to turn down, and they had barely made it into that positive territory. So to me, I had to go bearish. And then also, if you go down to the bottom, these are some of our under the hood indicators, if you will. So the price stocks with their price above their 20 just really dipped down. We have only a little over 0.25% with price over their 20-day EMA. And, typically when I'm investing, I like price above the 20. So this really leaves us with a lot less choices, if you will. And then finally, what really bothered me was the loss of so much rising momentum. So our price momentum oscillator, very similar to the MACD PPO, We think it's better, of course, which is why we use it. But you can see that the percent of PMOs rising, that rising momentum has just fallen off a cliff. I mean, it was in the 40% range. And then the very next day it was 17. So there are a lot of stocks on the cusp here where they're really flapping with the wind. And that makes it very difficult, as you were saying, to stock pick. So that's kind of what I brought for you today. And I just wanted to make sure all of the watchers of the pitch understood why I sounded so bullish yesterday when we recorded, and how my tune has completely changed.
It's so interesting because I mean, Erin, you've been doing this for quite some time, and I have as well. And I know that's, at times I've heard that as a critique of the technical toolkit. How could you be bullish and then be bearish? And my answer is the evidence changed. So when it does, I mean, how great to be nimble and recognize when things change, because how many bad decisions can you think of where you just stuck, dug in your heels and didn't recognize the fact that the markets are changing? When I'm looking at your charts here, particularly with the S&P and then the PMO, which is on the S&P 500. So the oscillator based on the S&P sort of gave a kind of classic sell signal there in mid-February and rotating lower. When you're looking at this chart, what would you need to see? It's obviously turned a little more bearish this week. What would you need to see to turn more optimistic? Is it back to a buy signal from the PMO? Is it improvement in some of the breadth characteristics, or what would you look for that would make you a little more optimistic at this point?
Well, I mean, obviously we want everything to be turning up the right way, but I'm not going to get that gift, I'm sure, for my writing. The PMO needs to turn up. That's kind of my primary indicator. And as long as we're seeing falling momentum for the actual index, and then that complete, like I said, crash on momentum within the S&P, I mean, I think that really just tells the story. We really need to see that positive momentum. Like I said, we have too many stocks flapping in the wind here. They're just going with whichever way it's going that day, and then it comes down. It's very difficult to invest. So we just have to keep that in mind and have that backdrop. If you are going to be expanding your portfolio, certainly honor your stops, set them. Right now, I mean, I always set a stop. I don't usually, I'll be honest, a lot of mental ones go on, but right now you can't. I mean, I won't. It's just it's too ugly. You can move them around, of course, but
right.
It's
Erin, you and Carl strike me as sort of, in some ways, classic technical analysts. Like you're embedded in the price behavior. It's a very indicator-oriented process, but it's really based on the evidence. So can you talk to us a little bit just about what do you do, or how do you make sense of a week like this where Fed comments all of a sudden make the market shift so quickly, right? Arguably, and when you're approaching the Fed, next Fed meeting here in a couple of weeks. What do you do? Does your process change at all, or do you stay consistent through that? What lessons can you teach people about how to navigate sort of those sort of big macro potential shifts?
Sure. I'm not the right person to talk to, because I'm what we call, for better or worse, a technical analysis purist, which you just hinted at. Yeah. So to me, everything else is noise. Everything is baked into a chart. Granted, things like earnings, and certainly you have to pay attention to some of that, but really the overall, you can't fight the Fed, is what they say. So I mean, obviously that's had a lot of caused problems for the market, and certainly this shift into a bearish position for me was, I'm sure, really brought on by the Fed, which yesterday everybody was. They keep thinking the Fed's going to get nice, and the Fed's not going to. And I think for your viewers, I would tell you, do not get optimistic about what the Fed is going to do. They are going to continue to raise rates. So just be prepared for that. Don't start thinking they're going to ease off. It's not going to happen. I don't even think they're going to do it this year, but that's me.
I feel like the finish line keeps moving for all of us. I would argue, Erin, you're the perfect person to ask, because I think so many times we get caught up in the narratives and all that instead of just focusing on the prices. And I think there's a lot of information embedded right there. Erin, this was a pleasure. Thanks for sharing some really interesting charts that we've not shared on the show before. And thanks for talking through those with us. Be well there in Southern California. And thanks again for hosting the show on Friday.
Of course, anytime.
All right, that's Erin Swenlin. Erin's at DecisionPoint.com. Again, creators of some fantastic tools to analyze price, breadth, and momentum. The DecisionPoint suite of indicators, a lot of them have been featured on the StockCharts platform with Erin's work, and Erin's father, Carl Swenlin, who's really a pioneer in a lot of those, creating a lot of those indicators that we find super helpful. I love how Erin answered that question, to be honest. It's so funny because so many interviews that I'm asked to do, we're asked to speculate on what the Fed's going to do, on what interest rates will do, on what the dollar will do. And we can talk about those things. But at the end of the day, what's really going to help your portfolio? I would argue if you had a choice between looking at price analysis and really reflecting on what's happening versus thinking of narratives and what could happen, I think the one far outweighs the value of the other. The other thing is interesting to talk about, but in terms of really managing your portfolio and focusing on the strength and weakness embedded in the markets, charts are the way to go. Great take there, as always, by Erin Swenlin at DecisionPoint. We need to wrap the show, folks, and go right to the 3 in 3. Let's talk about 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1. I'm starting with a weekly chart of United Airlines. UAL is one of the names having a pretty decent day today. Here we're up 2.25% on the weekly chart. You can see we're up to around 54.25. The reason why I wanted to do this weekly chart was just to show how I'm looking at so many trend lines on the S&P, on the Qs, on semiconductors, on a lot of things coming off of the lows. And I was doing the same trend line on the chart of UAL. And I was thinking, what if we bring on some weekly data and really think about some of those longer term trends? Now, again, these trend lines are not the world's most perfect trading tools, so don't assume that I'm implying that. But what I will tell you is I found it to be incredibly helpful as an analyst to think about the trend in the market, the overarching trend, and draw a simple trend line to just track the pace of that trend. And when that trend line changes, right, either we break down through the trend line, the price gets really far away from the trend line, that can tell you that the conditions are changing. And it has you, forces you really to dig a little deeper into the story and think about how and why the dynamics might be fluctuating. At this point, I'm seeing a lot of trend lines holding when I'm drawing lines off of the lows in the fourth quarter of last year, the first quarter of this year. As long as those trend lines hold, the charts aren't getting too bad. We start breaking trend lines using the previous lows, and I think the conditions could be getting a little bit worse. But a nice move higher after consolidating by UAL, some of the other airlines as well. Chart number 2 is a chart I just call the chart, and this is something I've done for years and years, and this started as a joke because years ago, someone used to always ask me, what does the chart say about the markets? And so I always would joke, and I just kind of create something like this, say, yep, here's the chart, as if there was just one thing we would look at. And then at some point, it stopped being a joke, and I realized having one chart, which is some key metrics that I thought told the story of the market we were in, could be pretty helpful. So these are the 5 things that I identified at the end of last year, things to track sort of at the beginning of this year, things that I thought would give us a good sense of where things had been and where things were headed. We're looking at the daily S&P on a closing basis, again, testing that trend line, which I think is really, really important. We mentioned the 200-day moving average a little below current levels as well. Trend line using the advanced decline data. This is the advanced decline data from the New York Stock Exchange. You can see a little bit above that trend line. But again, those trend lines break. I think conditions all of a sudden look a lot less attractive than they have up until now over the last couple months. The percent of stocks above their 50-day moving average has definitely gone more in bearish territory. When I'm thinking of my guest Erin Swenlin's charts, looking at some of the shifts in breadth, this is one of the charts that comes to mind for me, which is now almost 2 out of every 3 S&P stocks are below their 50-day moving average. That's not a great read if you're bullish and thinking that there's going to be a broad advance. It's not happening right now. Bullish percent index is right around 50%, and offense over defense rotating lower. My guest yesterday, Mike Zaccardi, we had a great discussion about offense versus defense. I'd point you back to that interview for sure. Finally, the McClellan oscillator barely remained in bearish territory, just like the DecisionPoint oscillators. I think there's a lot of concerns on breadth. Folks, that's a wrap for the show. Special thank you to Erin Swenlin of DecisionPoint joining us today. For Stock Charts, I'm Dave Keller. Have a good night. We'll see you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.